Hi, I'm Sophia Song, Head of Research at StreetEasy. Now that September is here, the summer selling season is officially over, and we've just released our August monthly market report. Today, we continue our market report video series with a discussion of what went on in the market this August with Don Daley. Don is a New York City appraiser with over 25 years of experience and founder of the REIS Group of certified appraisers. Over the years, he's appraised $10 billion of local real estate and advised hundreds of clients ranging from lenders and portfolio managers to estate planners and individual consumers. So when the bubble burst, everyone had predicted that the market would be flooded with inventory. But in fact, what we've seen in the past few quarters is that inventory actually has been shrinking. And in fact, this past month, it shrank another 11%. Why do you think that is?
Well, I think people are holding on to their property and choosing to refinance as a result of the historic low rates being offered by lenders.
So if people are holding on to their properties and refinancing, what types of people are actually putting their places on the market?
Well, I think people who realize that they're able to sell in this market and buy in this market at significant discounts and savings are the ones that are taking advantage of what's available today.
According to the StreetEasy Condo Market Index, the Manhattan condo market in July had a 3.3% increase from a year ago. This is the 6th consecutive month that the index has seen an increase, and notably it's the biggest year-over-year percent increase we've seen since May 2011, confirming the extremely active spring selling season we saw this year. So if you're not living in one of the hot neighborhoods, what could an owner do to increase the value of their home?
There's very little that they could do apart from arming themselves with some information about what's been going on in their building in particular. If there have been some low sales which have an explanation behind them, that should be shared with the appraiser on the inspection day. That would be helpful for the appraiser to know and might help them in the final estimate of value. Co-op boards can affect the value of their individual units by passing restrictions at their board meetings, which can lower the value of their units, and they should be careful not to be too restrictive.
This month, the most expensive closing was the Penthouse apartment at the Verona in Lenox Hill, which closed at an incredible $21 million. And the most popular listing currently on our site is the Penthouse apartment at the City Spire building, which is currently listed at $100 million. Both of these properties are top floor apartments with expansive outdoor space. In your experience, how are amenities like floor level, outdoor space, and view valued?
Well, those are trophy properties, but I would say that any property with significant outdoor space and combined with open city views is in a class by itself. They're not generally tied to what has happened in their building. They're compared to other penthouses. So this is why they're valued at a higher level, at a higher price per square foot. They're compared to other penthouses as opposed to, let's say, a ground floor apartment in their building. They're just not the same animal.
So do you find that purchasers of these kinds of properties, do they need financing?
I would say by and large, they do not. They are all cash buyers.
So as an appraiser, do you even get to see these properties?
Yes, I do, but not for the original purchase. I see them for cases of divorce or for tax appeals or for estate planning. I do quite a bit of work in those segments.
Overall, we saw contract volume rise 26.7% this month. And breaking that stat down a little bit more, we saw contract activity for starter homes increase by almost 16% and by nearly 40% for family homes. Do you find that a particular buyer or particular type of property is having an easier time getting financing from lenders?
Yes, I would say that applicants with significant levels of equity are having an easier time getting financing from lenders. Folks looking for their first home generally don't have much equity to put down. I would attribute the increase to that segment as being a result of their pricing decreasing to such a point that they're just a great buy. Studios are a great buy these days. And lenders are easing financing restrictions. 2 and 3 bedroom apartments are traditionally pretty stable segment of the market. They're occupied by families, and more families are choosing to live in Manhattan.
And so overall, what do you think this rise in contract activity means for the market?
We have historic lows as far as interest rates, and historic as far as the last few years as far as pricing. So this combination of low prices and inexpensive money spells out a simple supply and demand equation. Increased demand and decreased supply increases value, and I think that's the future.